The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast, joined by Pete, Paddy and Steve. You all right, lads?
Yeah, very good. Thank you.
Morning.
Six Nations start, boys. I'm not looking forward to it, to be honest.
No, I wouldn't if I was Welsh.
I know, because let's be honest, it's not one of the seasons for the Welsh where you're going into thinking, whoa, they're on fire. They're not, they're really. It's only two teams on fire, really, isn't it? I suppose, it's, France and England, isn't it?
I think so, yeah. Although it's always a little bit unpredictable, isn't it? And
yeah.
It's dangerous to be too cocky. So
well, England suffer that a lot, don't they?
Yeah.
Why do you get so cocky, you boys?
Just because.
When you learn your
Just a long history of
cockiness.
Dominance, isn't it? Yeah, and repression on other smaller nations. That's it. Sometimes it blows up your face, doesn't it? But a couple of times, actually. In fact, I still got that cracking picture of me, you, Pete, and Nicky McCracken in. We were watching that in Woking somewhere in the pub. And it was a shoe-in, wasn't it? Everyone was saying, "Oh, Wales are in front of hammering, yeah, absolute hammering," and Wales won. And it's like, well, always bet on the underdog. When it's a two-horse race like that, and there's a clear favourite, always go for the underdog, couple of quid, because you never know, and you get good odds to that generally, and you won't get better odds to that. That's gambling. We're going to talk about investing.
Betting on rugby really hard. All that handicap stuff really confuses me. I don't understand it.
No, I don't understand all that stuff. Why do
they do that?
Just keep it. Keep it simple. I always say this about everything. Keep it simple, right? When the internet first came around and there were search engines vying for market share, the winner was Google. Do you know what? Because every other search engine put loads of links, media, videos on their front page. Google had an empty box with two buttons. That's pretty much it. And they won out. Because all people want to do is search. They didn't want to get bombarded with advertising, sponsorship, links that you may like and all this stuff. So it's very, they won. So keep it simple. And as humans, we tend to try and overcomplicate things. We start off with the first iteration is quite good, and then we layer it and layer it and layer it and layer it to it's too complex. And that's the same with investing. There's so much stuff that people look at and metrics. You don't need that. Generally, buy low, sell high. That's all you need to know. And that's harder than you think. If you can do that. Well, yeah. No, it's honestly.
Good night.
See you later.
Yeah, see
you weekend.
Anyway, coming up. Lots of stuff coming up, boys. Think about TV recommendations. I saw two things this week I quite liked a lot. So anyway, we've got the TV recommendations. Learning lessons from losses. Why shares go up. And I want to talk about the best performing stock of 2020. I've had a bit of flack from it on a last podcast I did on Twitter. Sailor Steve, Six Nations, Pete's questions, and Paddy's got a question as well. So let's start off with, first of all, learning lessons, right? You know, when Paddy's like this, politics, right? Bit of politics. In our WhatsApp group, we always be a bit careful because Paddy comes out and starts slating Boris or something. And we say, okay, Pad, different channel maybe. But when people whinge about the government and it turns out they haven't voted, you're like saying, mate, you haven't got a voice, shut up. If you didn't vote, shut up. And that's what I feel about. I got a bit of flack recently. There's always one troll, right, trolling me about Bidstack because he didn't get out. He obviously didn't do any research. If you don't do any research, you're fine. You're allowed to not do any research and buy shares that someone recommends. That's fine. But then you don't have... you can't come back on that person if you lose money because you didn't do any research. You didn't put any time and effort into it. So Bidstack did really well, right? And the story changed. They spectacularly missed their revenue targets. By literally, the revenue target was 5.6 million for the first year, which is phenomenal in a new tech company. And they did like 140 grand or something ridiculous, So nowhere near it. That's a story change. Absolute story change. So when that happens, you get out, in my opinion, or you hold in for a bumpy ride. So I got out. I was overly enthusiastic about Bidstack at the start because it's exciting tech. It's gaming, it's very hot, new tech, in native English. So I was really excited about it. And so maybe I was a little too rampy looking back on it now, right?
I like you.
Yeah. Wow. But this is a seminal moment. Okay.
This one guy. Now Bidstack again's had a hammering because they've come out with their revenue, and it's not looking good. Okay, they've exceeded revenue. That revenue target now, by the way, is 1.5 million. So it's gone down. It's about a quarter of what it was for the first year. They've just exceeded that, but also, so they're going to do 1.7 million in revenue, but their losses have increased by 1.8 million to 7.4 million. So, and also the sales cycle is extending. So that basically means they're going to focus on technology more. They're saying sales cycle is extending. That basically that says to me that revenue's they're not going to knock it out of the park revenue-wise for the next year or 6 months because their sales cycle is extending. That's polite speak for saying, listen, we're not selling a lot. It's going to take a lot longer. So, so of course, the shares took a knock again. And I argued with Alan Green on the podcast about Bidstack. He holds shares. And I said, no, I like the tech. I still like it. But it seems it's taken a long time to gain traction. But when it comes to story changes, you have to change your opinion on it quickly. Otherwise, you'll be sitting with a big loss. So, and someone said to me on Twitter, they said, all your stocks you've talked about in the last 6 months, I've done really well on them. And they talked about Gfinity, Escape, and all this, and a few others. And I said, listen, many of the stocks I invest in do okay. As I do quite a bit of research in them. You get the occasional loser, and by that I mean stock as well as person, who will always blame me for losing their money. I'm not in control of their investment account. I don't have your password or your details. I don't buy the stock. I don't sell the stock. That's up to you. I always say do your own research. It's not investment advice. But I bought the stock because I
say that so much.
I know, but it's not investment advice. So listen, people who blame others, the thing is here, people who blame others, right, do not take responsibility. And that's a key thing because it's their own decisions they're making, but they say it's not. And they don't learn a very valuable lesson when they lose. When you lose, this is what's good about investing. You go in, you invest to make money. When you get it wrong, you lose money. It hits you in the very place you don't want it to hit you. You wanted to make money, not lose money. So it hurts. Now, if you take on board that and learn a lesson from that, you get better. Unless these people who blame others, the blame game, blame culture, you will not learn a thing. You will not become a better investor unless you look at it and say, why did I lose there? And learn a lesson from it. It's a positive experience.
Totally.
It's a positive
I've
experience.
lost loads of money following your advice.
Yeah, exactly. Thanks, Pat.
Yeah. I've also made more money following your advice. And the longer I go on this, the better I get at it. Like I did lots of research into Bidstack. I didn't like it as a company. I still lost lots of money there. And in retrospect, I should have just followed my gut.
But in a way, Justin always says this, though. It's like it's quite good to lose a bit of money at the beginning when you start investing because it does teach you a few lessons. Because I think if you go in there suddenly making loads of money, you almost think you're a bit invincible and you start going a bit crazy then. So actually, sometimes to start like that, it's not a bad way, is it?
But also the three of us, obviously being on this podcast, we're pretty close to Justin, and we don't necessarily follow all of his sells or his buys, do we? Like we make our own decisions, and like you're saying, if I nag you a lot, you do. If I nag you and keep nagging,
to be fair, escape hunts took us a while to get into, didn't it?
Yeah. That's true.
Yeah, I was shouting at you at 7 pence, escape, and get in. No, and now it's 25 pence. So there we are. And Gfinity as well. No, I'm getting better all the time as well, though. The way I'm picking shares has evolved. Literally, like I said, when I first started, I was picking resource stocks, pop and drops, and I realised I have to trade those more. And I don't like trading. I'm not a trader. And so I want to get, and I learned from it. I've taken a couple of hits on resource stocks. I looked at it and said, I want sustainable rises. How do I get sustainable stocks that rise sustainably over years? So I looked at the best performers, on what site was there? One of the websites, and I and come up with JD Sports, Boo, and all these companies. So, okay, so what do they have in common? So I looked at them all. Basically, it's growth, and the growth of their earnings. That's why a company will rise sustainably. So what you're looking for, ideally, you want to get a company that's not profitable, but going to be profitable. Then you can see that sustainably rising, those earnings as profits. If you got that you're onto a winner. And that's what I'm looking at now. That's what I look at the companies I look at. I don't look at any company that's not near profitability because they'll probably have to go back to the market and raise money, dilute. And that's why a lot of resource companies not generating real value, profits, will pop and drop. You'll have, listen, you can do well, amazingly well at resource stocks. And some of the best performers in years are resource stocks because they can pop for a year. But when that drop happens, it can happen. It can be, quite aggressive, and you can find yourself giving back some of the gains you've had. And I don't want that. I don't want stock to pop like 300%, in 1 month, and then drop by 150 or 200% next week. I don't want that. It's like nerve wracking. You don't want to get in or get out. You've got to time it right, and so I don't want that.
But I think my point is that everybody is an individual, and even us being close to you, well, it doesn't mean we just then follow what you're doing. C4XD is a good example. Me and Paddy are still in there. You got out because
We're going to make $1 million in that.
You got impatient, but that's fair enough. But we each have our own. We're all in charge of our own buy and sell buttons, aren't we? Yeah. And I'm still in there, and I'm actually now 25% up in C4XD. So that's going nice. So,
come scaled in, scaled in. Listen to C4XD again. It ticks a lot of my boxes, but the one it didn't tick, and that was profitability. And so, but they got a different kind of model there where they could reveal, a licensing deal, next week or whatever, and it will be profitable for that year. They'll earn a big chunk of cash that year. They'll get paid up front like 12 million or something ridiculous, But that's not the kind of lumpy revenue I want. I want, consistent revenue or profits coming in. So, but there's a huge potential there.
I'm interested enough to stay in it, so is Paddy.
Yeah. No,
I was interested enough to average down.
Yeah, I've averaged down as well, which is why I'm only now 40% down.
Okay.
Yeah, but they got huge potential there. They got IP, which I quite like. That's a moat as well. They got pretty much a cutting edge model. I don't like it. It's just that revenue thing. I've got to stick to my rules. I've got to stick to the prove right.
Also, their complete refusal to publicise anything they do.
Yeah, that was funny. Was it Clive Fordix? That was funny, wasn't it? That was very funny.
No.
Well, the point, guys, I realised Clive, right? He's now head of the other lady's getting all the press. He's head of the vaccine task force.
PR. She works in PR, doesn't she?
Yeah, maybe yes. Yeah. So let's be honest. Clive Dix is the CEO of C4XD, C4 Discovery, or C4X Discovery, and he is also now the chair of the Vaccination Committee Task Force, for the UK, which is doing very well. Let's be honest, one of the best in the world. But yet he doesn't. He seems to be very busy doing that, and not busy releasing news on. So they had some news out that was RNS worthy, wasn't it? I suppose they had a grant and everything, didn't they? And this week, and they didn't announce it.
For it's a company that is. What did they say? They're working on like 10 different sites, 10 drugs.
Yeah, 10 drugs programs. Yeah.
So they've got the one with Individual, and they've got the other one. And this sounded like it's a new one that they're working on. So you would think worthy of RNS.
Yeah, well, that's it. Lots going on there. What they need now, when you're doing R&D in drugs, it costs a bit of money. You talk about lots of people doing it, laboratories. It burns a lot of cash. That's why they need to get some licensing revenue out the way soon. I know they raised money recently, so they're okay now. But how long they last for?
I had a good rise this week, probably based on that news. But like you say, it wasn't very publicised. So
yeah. But I just
didn't hear about it.
I just looked at the ticker there. C4XD, CD is Clive Dix. And so that's it's not C4X Discovery. He's put his name in that, isn't he? Let's be honest. It's a bit of an ego there. It's Clive. And I thought Clive Fordix. Clive Fordix. I think it's so funny. I put that in the WhatsApp group with lots of funny gifs, and you all laughed. Well, I did. Anyway, I wanted to talk about.
You're a bit dyslexic, I think.
Yeah. I want to talk about growth, right? Because I got a bit of flack about a company. The best performing share of 2020 was Novacyt, right? Now, phenomenal growth. If you bought on the 2nd of January at 14 pence, right, you could have sold on the 31st of December at £8.61. That's over a 6,000% rise. The reason why...
Why did we miss this one, Justin?
That's what I've done in my book.
Don't worry, Harry and Larry wouldn't have let you sell anyway.
They wouldn't have, yeah. But do you know what? That's what I've done in my portfolio in the last 11 years, 6,000%. So that's done that in 1 year, that company, right? So, and good question. When you look at that, think, okay, why did it rise? Why did it rise? Because the key to finding the next big riser is looking at, look at winners, not losers. Look at winners. You can learn from losers, but you've got to find a winner, So look at why did it rise? Now, the reason why it rose is because, of course, COVID-19 came around, coronavirus, and this was a very good testing diagnostics company. And they had the kit, they got in there, started monetizing it very quickly and ramped up production hugely. And they were the leader in the field, market leader by far. And so
what do they do? They're the guys that do the tests.
Yeah, COVID testing. Yeah, but the diagnostics, it's not only that. They can test for all kinds of viruses and all kinds of stuff. So they can, they've got a full range of. But luckily, they're sitting there in the middle of a pandemic. Thinking, hang on, this is us, And they all hands to pump, and they started churning them out, getting contracts in the NHS and everywhere. There's still companies now not even got contracts. They're still, They are bathing in the trail of this the vapor.
Big pit of coronavirus.
Yeah. But Novacyt is the trailblazer, and everyone just wants their company in COVID testing to be the next Novacyt. So the reason why it rose, right, is, and any share, the reason why a share rises is the growth potential of its earnings and value generation. The growth is all you should look for, and that's where we're at. They're in the small cap space. It's all about growth. It's not about dividends. There's two ways to earn money from shares: growth or dividends. So it's about growth. Now, the share rise was due to this. Now, it's either because it's growing very quickly right now, or the perceived growth very quickly is going to happen. That's why shares rise. So look at the rise in this share price now, right? And then we got the results. So revenue increased there from 2019 to 2020. Revenue increased by 23 times, right, from 13 million euros to 311 million euros. EBITDA, cash basically generated 1,000 times it grew by. So from 0.2 million to 210 million. Cash went up by 56 times. They had 1.8 million at the start of the year. They now have 101 million in cash. Right? Now, if you think, people are arguing with me because I was on the podcast with Vadim, head of healthcare from SP Angel, and I said the rise has happened. Testing has had its peak. And they said, no, look, there's more testing going on generally. I said, yeah, of course, and Novacyt will probably do well. And the thing is, there's a lot of followers now of Novacyt because it's been the most, every year, right, the most popular, the best performing share gets a lot of followers, because it creates a lot of noise. But there's a lot of people saying, oh, you did not seen this, Justin, you close your ears and getting personal. I'm just looking at purely from an economic point of view. Now, if you think they're now at a 500 million market cap, right? If you think that their revenue is going to increase by 2,200% again, keep holding the shares for that rise again. It's going to happen. I don't think they're going to do that. I think they've had the heyday. They've made the hay. They're still going to do quite well. I'm not saying they won't grow anymore, but that growth won't be as big as 2,200%. That's why it rose so explosively, because that growth was explosive. And all I'm saying is this. I don't think the growth going forward will be that explosive. They come from a small cap now to, $500 million they are now. So the bigger you get,
I was going to say, won't they move out of the junior market and then you don't need to start looking at like dividends and actually that kind of stuff. So you're investing for a long
maybe
like
yes,
that?
but now the problem is that they are undervalued. I'm saying this. Listen, people listen over. They are undervalued if you look at their earnings. So they did 210 million in EBITDA, right? So if you put it on a P of 10, even on a multiple of 10, then that's $1 billion. It's over £1 billion pound. That's double their share price from where they are, pretty much there, and that's quite conservative. 10 times their EBITDA for a fast-growing company. But
that's 2 billion. That would be 2 billion.
10 times, 2 billion. Sorry, yeah. So it's four times where they are now. But so what? So why have the market seen this? Do you think? Why isn't the market pricing this in? You've got to question that, right? Novacyt holders, why do you think the market's not pricing this? Now, either you know something the market doesn't, or analysts or anything, or analysts don't believe they'll be growing as quickly as that come next year. They don't think they'll be generating as much as that as next year. And that's why the share price isn't up. And you could argue, it's a good argument. Yeah, okay, I'm not saying they won't grow, but they may 10, 20, 30%. It's not 2,200%. And that's why shares rise. The growth, there's explosive growth. That's why the shares rose, right? I don't believe. All I'm saying is that they're a good company, a good diagnostics company. It's probably going to be a good business, but the growth, that's explosive growth has happened. It
must be an interesting atmosphere around their board table, because presumably everyone there has got options or has got shares.
Yeah,
and they must also know that maybe next year things might not be quite as good.
Yeah.
So if you suddenly own a load of shares that have gone up, what was it? 600 times? What was it?
6,000%.
6,000 times.
6,000%.
So
you're going to be tempted
times.
You're going to be tempted to start selling some of those at some point, aren't you?
Yeah. But the thing is, when they were sold, where they're good to see, they've made the hay while sunshine. They've got, like I said, 101 million euros of cash now. They and also they're going to be probably profitable for a long time. So there's no rush. I mean, they've got other products there. They understand they're not going to get a pandemic again that'll make them churn out. So what I'm saying is, I'm not saying the share price will drop off a cliff. No, I'm not saying that. All I'm saying is the growth was phenomenal, and now it may go back to being a bit normal.
It's had. I'm looking at the chart. It's had a big pullback in the last couple of weeks, hasn't it?
Yeah.
So
let me just say one thing.
It finds a level, doesn't it? Perhaps.
There's a seller in there.
Well, listen,
yeah.
By the way, have a guess how many out of the top 5 performing shares go on to be in the top 5 performing shares next year? From 2019 to 2020, how many were in there, do you think?
Zero.
None. Yeah.
Yeah.
And also, again, shares become very popular, usually because they've risen very quickly. That's when the noise starts going around. In fact, Eurasia Mining, who Eggy called me about 2 weeks ago, I said, no, stay out there. That's been in the top 10 twice. Likely chance of it being in the top 10 again? Very slim, And like I said, it's and so that's why when people hear about shares, like I said, they get popular when they've risen. They get popular when they've risen a lot. This is not.
This reminds me of a story.
Yeah. I'll just come to that in a bit. This is not often the best time to invest after they've risen a lot. The best time to invest is before they've risen, before anyone is talking about them. When you're buying shares in a company, there's no volume in, but you can see massive potential, and the share price hasn't risen. That's the one that could be in the top 10 next year, not the one that's everyone's talking about and that's risen massively anyway. That's all I'm saying.
Of course.
I know I get personal attacks on this saying you know nothing about the company, because people are, but there we are.
Yeah.
You seem to have had a few people on your back this week, Justin. Right? You seem to you spent 20 minutes justifying yourself.
Any other arguments to discuss?
Has anyone else got personal with you?
No, I just I'm not personal about that. Listen, I hope Novacyt goes on and does it again. I don't care. I don't hold stock in it. If it does it again, fantastic. You guys are right. All I'm looking at is objectively. When you don't hold shares in a company, you can look at it a bit more objectively and say, okay, will that happen again? I doubt it, because that was the growth. It was phenomenal growth. Like I said, it was the best performing share of the year. That is phenomenal. That's extraordinary. How and extraordinary doesn't happen every day, because it's extraordinary.
It's very hard to understand how people can't see this. I don't get why they would have a go at you about it.
Yeah, I think the thing I was saying is could go off a cliff. I don't think that at all. I think it could be a good business going forward, but I don't think the growth will be anywhere near 2,200%. That's what I'm saying.
But equally, like I say, that pullback in the last couple of weeks, people will have been burned there, because some people will have jumped in and go, oh, wow, this is still going really hard. And you just know that, unfortunately, people will have got carried away, probably, and they're now 20% down. We've all been there, I think, at some point in our investing careers.
Well, like I said, I mean, one of the filters in there when I look at the companies is size, right? And the reason why I did this, because I spent 1 year going back 5 years looking at the best performers. And every time, pretty much 75%, I think, of companies who were the top 10 best performers that year started off with a market cap around 30 million or below. And so you understand that the bigger you get, the harder it is to grow. So that's why small cap companies are where it's at, and micro cap companies where it's at. I'm not saying 100 million market cap can't become a billion at 10 bag. It can, yes, but there's less chance. The bigger they get, that they'll get that massive return, a multi-bag return. That's what I'm saying. So it's a lot easier to go from 5 million to 50 million than from 500 million to 5 billion. All right. So, by the way, I want to talk about on the market. The share price is under pressure. Do you know why it's under pressure? Under pressure.
Is it under pressure? It was up a few days this week, no?
Well, it's going like it's sticking around the pound level, isn't it? Right.
Oh right, yeah. It's not really doing much.
No, it's not really doing it because there's a housing market freeze. I've had one alert from Zoopla. No, I think maybe a couple in the last week. So because of stamp duty, because of COVID, they gave a stamp duty holiday. So if you're buying a house up to $500,000, there's no stamp duty. Before I think it was 5% or something like that. And also they brought it down for other parts of the brackets as well. But March 31st, that ends. Stamp duty holiday stops. Yeah. And so there's a lot of people right now saying, they've bought a house, but they won't get it through. Apparently there's a backlog of people getting the deals, trying to get the deals done, and lawyers, solicitors and all that stuff, and getting it done before 31st of March. So some people are maybe pulling, saying, I'm not going to get the stamp holiday break I was going to get. There may be an extension to that, but I'm thinking, who cares? It's probably priced in now. That's why the market's, stopping a little bit. And on the markets, if you look on the market, it's risen, but it's gone sideways. That's not a bad time. Sideways is good. That's a good time to buy,
The thing is, you say like the housing market's frozen at the moment. Well, a lot of industry is frozen at the moment in a lot of sectors. And so that's the interesting thing. And let's talk about our your beloved escape hunt. If you like, they're frozen at the moment because they can't open. But they're having a good rise because people are, I assume people are investing for the future and looking 6-12 months down the line and going, this is a company that I want to be in. So it's interesting with OnTheMarket that did happen, but that's had the big pullback now, and people are reluctant, it seems, to invest in that 6-12 month picture for them, whereas Escape Hunt, which is equally frozen, is not having its share.
Yeah, I think different with Escape Hunt is because it's online. It's all online.
Yes, talk about Escape Hunt. Leisure Stock, for example. Let's take,
but hang on, but things all online, right? It's all on the market's all online. The problem is they get more traffic to their sites and all that stuff, and more agents signing up when the market is fluid and it's operating and people are selling and buying. At the moment, people are not selling because they not make that. They want to see if there's an extension to the window on the holiday, on stamp duty, So there's no more, the traffic may go down for all these companies, right move. But if you look at on the markets, right, I don't care. So it's impassive. It'll stay here for a couple of months or a month or two now. We'll know whether it's going to be extended and it'll move on. So it doesn't matter. Yeah. But what I'm saying is this weakness is a drop opportunity a little bit here. If you look at on the market _expert on Twitter, right? _expert on Twitter. Look at the lettings companies they've signed up in the last 2 weeks. It's phenomenal. Every day, like 2 or 3 new agencies are signing up to them. Unbelievable amount. And they're only there are about 14,000 estate agents on their books. Rightmove, who are 80 times their valuation, got about 19,000. That's all. And these guys now are signing up. The only portal to grow last year was on the market because they're smaller. And I'm just looking at the potential going forward. So, when there's worry or concern, like any time in the market, that's the time generally to buy. We know that. When there's fear in the market, you buy. Like the drop, the dash for cash back in March last year, that was a massive buying opportunity now, looking in hindsight. But everyone was scared. And the clever people bought then, But so what I'm saying, when there's fear or worry, that's the time to take advantage of that,
Yeah, absolutely.
In fact, let's come to your questions, Pete. Let's come to your questions, right? Peter puts 2 questions to the panel, very similar, but in a similar vein. AIM as a whole, is AIM a whole? Some of the companies are. Is it an all-time high now? Is it cause for concern? Let me finish the question. Let me finish the question, Pete. Is post-pandemic priced in yet? I thought, have you checked that AIM all-time high fact first of all? Because if you haven't. I was
looking at well, when it first started in 95, it had a big old spike in about 98 or something. I was looking back really historic. Okay, let's call it a 10-year or 20-year high. I mean, it's right up there now.
Okay. Is it a cause for concern?
Isn't that inevitable?
Yeah.
No, because it's AIM, so it's a big old roller coaster, isn't it?
Yeah, but when they say it is AIM. But when they start off, I suppose. It's new, and I don't see reporters in 25 years apparently, and they've been getting better quality companies coming to AIM from around the world.
But look at the 10-year chart, and it reached these kind of levels or just below here back about 3 years ago, around 2018, and then from then had a right old tumble, and then obviously the pandemic.
That's just when I joined. That's just when I started. Yeah.
Right. So it's risen from there, and then post COVID or since the dash of cash, and it's now up a level that's higher than that, and like I say, that's a 10-year high, and probably a 20-year high actually. Where we are now, and so is it cause for concern? Because you kind of go, is it going to rise forever?
No, listen. The thing I think is this. Now, I got too obsessed with the macro last year, and worrying about debts and all that stuff. Don't worry about that. We have too many things to think about investing. It's too much options. Again, keep it simple, right? Think about the company you're invested in. Look at that valuation and the potential going forward. That's all you can do. Yeah, you'll have dips, of course, with the wider market, but you can't control that. Just focus on the less moving parts you try to keep together, keep it organised, or try to hold together, try to maintain, the better. And I think, look at the individual companies. Is the story still there? Is the growth still there? And that's all you can do. And
it'd be interesting to see the split of AIM and the percent, like how much of that overall rise is down to maybe a handful of companies dragging up
like Fever Tree and all that.
Yeah, no, AIM performance. Yeah, I mean, literally, it's not. You should not get a fund for AIM. It's pointless. Because you've got a couple of, you've got like, let's say you got how many stocks on AIM? Let's say a couple of hundred, I don't know what it is. But let's say 100 to make it percentage terms. You get some, 5% phenomenal outperformers, and then you get some that are at the dogs losing 90%. That is not a good fund to hold, Your funds you want to hold are basically as consistent as possible. So they're, like slower companies, but all rising nicely, about 5-6% maybe a year, rather than having some massively outperform and lots underperform. So a fund of AIM, pointless. It's a stock picker's market, and like I say, it's a stock market. It's a market of stocks. Always think in that term. Don't think of the stock market. Just think market of stocks. The stocks in there will always do well, regardless. There's always a bargain to be had somewhere. In fact, Jim Cramer says that there's always a market. There's always a bull market somewhere in the world. He says, and that's true. There's always a stock doing well. Like COVID, when everything shut down, the COVID stocks, Novacyt, phenomenal, 6,000% performance in 1 year. There's always a rally somewhere. There's always opportunity in the market. So I wouldn't worry about the general indices or the macro.
But that graph's also based on, what is it? Is that market cap of all the companies, or?
Yes.
So if there are a couple that are really, big firms, despite being on AIM, it's going to drag up.
There are some big firms on AIM now, thanks to their growth, due to being on AIM.
Yeah.
But okay. I mean, it's not something I look at a lot, but I thought I'll look at the chart of the index as a whole, because if you look at exposure, my portfolio is exposed to AIM quite heavily. So,
but don't worry about that. No, AIM is nothing. The actual AIM is not a business sector. It's a made-up indices. The made-up indices. It's like saying the peat indices. Go around the world, getting all the peats together called peat, and saying, oh look, 3% of peats died before the age of 23. I wouldn't like to be a peat. There's nothing to do. That's where they live, and they've got a car. You're trying to find commonality among something that's ridiculous, Right. So But
Peter, are you worried that if like the rot starts to set in, it's going to spread through our AIM for?
Well, as Justin will always say, selling begets selling.
Yeah.
So but you get general liquidity and worriness in the market, and people start selling, of course. But that's not. But listen, if you're holding like Boohoo, that's going to be affected in a different way to me holding like a med tech stock with pre-revenue. So it's those two are completely unrelated. So people that's the trouble. People put these terms on these, like for example, the FTSE 100, which is the 100 biggest companies in the UK. Now they're listed in the UK under the biggest 100. That's all they have in common, pretty much. Some of them may have the same sector in common, but oil and gas, a couple of those in there, a couple of banks in there, and they're skewed towards that actually, because they're mostly banks and but generally, individual companies are different businesses, aren't they? Different sectors, different markets.
Sure, and it comes down to valuations, doesn't it? Yeah. And like you say, I look at my portfolio and just look at the individual stocks and assess whether I think they are good value for where they are now, or whether undervalued, overvalued, whatever. And that's what you're looking at, is individuals. But I don't know. For once, I looked at the market, the index as a whole, and was like, that's pretty.
Don't look at the index as a whole. Look at your stocks.
Yeah. Okay.
Your own index. Just look at your own index. Stop looking at other people's indexes.
Right.
No, do you know what? I always say, listen, if you want a bit of... I always think, private investors or people not as active should have a fund in there. It should have a fund there, and that should be with diversification. Like I said, the Vanguard, the one I like the most pretty much is the Vanguard Life Strategy Fund, 100% equity. It owns every stock in the world that's half decent, pretty much. It owns Apple, it owns all those, it owns about 1,000 stocks. That in itself, diversification in one easy buy. Put that in your portfolio. I don't know how much you want to have, but I'm trying to work out a formula for this. Listen, I'm starting a project. I won't mention anything about it. Also, got a new stock I won't mention. Not yet. It's going to take a while. But sign up to my newsletter and you get it. But sharepickers.com. But there's a project I want to start, right? I'm very excited about. Very excited. I've changed it. I haven't told it to you boys. It's not the one I've mentioned previously. I'm getting more excited by the day. I'm literally in the shower, fizzing. I've woken up 3 times this week at 2 o'clock in the morning.
Horrible thought.
I'm like a bath bomb. One of those.
I feel a bit ill now, actually.
You'd love to see that. A video of it. I'll send you a video of that and put it on TikTok.
No, please.
But listen, I've woken up at 2 o'clock in the morning for 3 nights in a row. And I'm thinking about it, ideas for it, and I think it's going to be very good. I'm very excited about it.
Is it an escape room?
No, it's hoping to help. I'm going to help fellow investors, new people in the market, but it's not what I've mentioned to you before, and I quite like it. Anyway, yes.
I'm excited. You've excited me there.
Yeah, I'm excited. I'm
Are you going to tell us later?
Maybe.
Okay.
But what was I saying? No. Yeah, but so anyway, that's that. What else are we going to mention? Anything else? Funds. No, I was trying to work out a formula for funds. I was thinking, I was in the shower yesterday, thinking, okay, if someone says how much funds do they have, then how do you work it out? And sometimes with so it'll go by age, of course, because when you're younger, you don't need to be as safe. You don't need a fund taking up 50% of your portfolio. It's a waste of time. But as close as you get to retirement, you want less volatility. And I was thinking, okay, what do you do? Let's say retirement is 65 and you're 5 years away. How much of your percentage, how can you work that out? I said, what's an easy way to work that out? So I want a formula. And I did think it through, but I've forgotten it. But it's basically, if you got 5 years,
story, bro.
If you got 5 years left of your till retirement, times that by months, and that's the percentage you should have of it in a fund, pretty much. I was thinking, is that right? Depends how active you are. But you can't do it like that. So how many is 5 times 12? 60% should be in a fund. That's quite reasonable, isn't it? I suppose, because that would then bring down the volatility of your portfolio a lot. So when you got
maybe.
No, other way around, maybe. No, go on. I don't know. Go on. No, even age-wise. Even age-wise, isn't it? So, literally, 60. If you're 60 years of age, you should have 60% in a fund. 65. But you should never stop investing. I love it. And you boys,
You're not
right?
overthinking that a little bit.
Maybe not.
Because I just chucked a couple of grand into my fund the other day, actually, and it was just somebody I'd skimmed off the top of Gfinity.
Good.
All right.
I
might have made a bit more if I kept it in Gfinity over the raises of the last couple of weeks. But at the same time,
stop doing that.
Yeah. Yeah, but now, just a couple of grand in it, and I thought, I'm just going to do that every now and then. And I think when I make a success on another stock, I'm just going to skim it and put it in there.
That's good, because that fund, if you look at it, it's doing about 10% a year, pretty much, right? And that 10% growth a year is cracking compounded over time, and that's when you start paying off. Like when you start holding a fund for like 10 years and you're compounding, and 10% and all that, you get a little bit of it. That's when it starts paying off, and you'll have a nice little nest egg. But it's all about, a question of when people invest, what do they invest for? Do you have I asked you a while back, do you have a goal in mind as to why you invest? I mean, Steve, do you have a goal in mind, or do you quite like it now? Are you in a bit of money, or looking at a bit? What is it?
Ultimately, I've pretty much been in my same house since it was my first house, so I'd like to kind of get
a smart door. Smart door will let you out.
Yeah, exactly.
Stay stuck in it.
Alexa, open window.
Let me out.
Where I've seen a lot of my friends who have kind of like stepped up the housing ladder, really, by buying the next house, kind of stayed in the first house. So it's quite hard to.
Your mortgage must be really low, though, no?
Yeah, absolutely.
Oh, what a dream!
But it'd be nice to kind of get the next house without extending the mortgage for another 25 years to a stupid rate, So
you can do it.
So
Steve.
I think, just it'd be nice to get the next house and not taking out another mortgage, to be honest.
Go on, Pad. What about you?
I'd like what I see as hopefully at some point in the future a second form of income, so that I don't have to keep on doing jobs that I don't like.
Yeah,
I basically don't want to be like I don't want to be older. Continuing to, I want to enjoy my work, so I want to be able to choose jobs that pay less that allow me to do that.
That's life, isn't it? Just choosing to do things you enjoy. I'm lucky. I love what I do. This is what I do. I love it, and that's what. Pete.
Similar. Financial security really, it gives you options, doesn't it? It gives you choice. So get to that point, and then you've got money to play with, and be it buying property or even a bit of philanthropy. That might be nice.
No, exactly. But you know what? Yeah. I just genuinely think, I keep saying this, I don't understand why the basics of investing aren't taught at school. Because if you imagine now, knowing what you knew now, 10 years ago, and thinking how much money you could have earned, and because the losses, as you get better, avoiding risks and understanding what things are and how much money to put in here, just basics, And listen, when I left Capital Radio, right, because I thought I had a job at XFM pretty much, and that fell through, And do you remember that the whole GCAP and the takeover bid had to sell XFM? So I moved to Cardiff pretty much, and that sort of fell through and all that stuff. So the financial crash happened, and I was in, without a paddle up Crete pretty much. And I thought, what's going on here? So I was working at Nation Radio, which was a part-time radio station, being paid no money pretty much. In fact, pretty much covering my petrol expenses pretty much to travel to Neath in an industrial estate to talk nonsense on Saturday. And at the time, I was renting a house, right, which I could barely afford the rent on. Then Megan fell pregnant. I had a flat sale from London, so I had about 20-odd grand. And I thought, right, what can I do here? I was applying for jobs. I couldn't get jobs. I couldn't get jobs anywhere. I said, this is scary. I'm 40. I'm fat. I haven't got a decent job when he prospects. I can't afford a house. My missus is pregnant, and I can't get a job. What's going on? So I started going to the stock market. I thought, here we go. So I put the money in the stock market. I lost half my money within 6 months. I thought, oh my God, that made me more depressed than ever. And then I thought,
but you were real fun to be around.
Yeah. I was awful. It was honestly one of the saddest times of my life. Very dark, and I thought, what's going on here? And so then I thought, right, okay, let's start thinking about this. And I took on too much risk. But essentially, from then, right, I had barely paying the rent and all that stuff. But from then, 2015, I withdrew 6 figures from my ISA account to start a mortgage. 3 years later, I withdrew 6 figures again to pay off the mortgage. And now I've got more in my ISA than I could, well, basically, I probably pay for my house 4 times over. So that's what you can do in 10 years if you like it and put your money. You can create your own wealth. That's what I'm saying. It's not a boast. So I'm saying basically anyone can do it if you have the patience. And you can do it. There's only 2 ways to earn money. I always say this.
That's coming from someone who doesn't have patience.
I was going to say, yeah. This is an incredibly inspiring story.
But the thing is, I've done it, right? And I've made lots of mistakes. You could probably do it in half the time if you didn't do some of the things I did. But I mean, and because I made silly mistakes with spread betting and all that stuff, and I shouldn't have done that. But I was trying to find my way. And that's part of the project I want to do now. I'm saying, listen, you can do it quicker. I can help you quicker. Avoid what I've done, and I've made mistakes, and it's, again, learn from lessons. And that's all it's about. It's learning from lessons. And only 2 ways to create wealth. You've got to do it. I mean, I don't want to be old and not being able to afford to go on holidays or not being able to afford to put the heating on. I want to be a comfortable pensioner. Life gets generally harder as you get older, I think. And the only comfort you can have is having your own comforts, being able to go abroad and travel if you want to, have a nice house. There's only 2 ways of building wealth, isn't there? Owning a successful
business.
Drugs. Yes, selling drugs, apart from that. And winning the lottery. I keep having to say, ignore those 2 kids. My kids don't say sell drugs, but lottery. I say to kids, 2 ways, kids. Own a successful business or have a share in a successful business or businesses. And you can do that. And it's there for you. It's the stock market. And you'll love it once you get into it. It's self-learning.
I feel like we should have the music from Independence Day playing underneath this.
No, but
this is genuinely inspiring.
Or Titanic, I think.
Yeah, I genuinely say I love it. I think everyone should. I've known people like Vanessa down the road. She started dabbling. How can I earn a bit of money? Like that. And all of a sudden now,
loves to dabble.
Yeah, all of a sudden now she's starting to do a bit of research, and I love that. She's one of this, and she's looking at videos I've done before. She's what stock is this? And so I invest in that, and now she's starting to read up on stuff about it. And I like that. I really like that. You get to learn about things. Anyway, that's what I say. Hey, TV. Should we go before we go? Should we go? How much time we go? Yeah, Six Nations. Yeah, we talk about that. What else is there?
What's your prediction for Six Nations? Who's going to win the
France?
overall?
If I'm being funny, if I'm blindly faithful to my nation, it's of course Wales. Right. If I'm being realistic, I think obviously England or France, but Ireland you can have a discount, can you? I don't know how are they playing these days.
Yeah, I think France. Because they were looking pretty good in the autumn.
But they're not consistent, France. Well,
no, they're very inconsistent. But,
I know.
Yeah. Okay, interesting.
Right, I was going to say, do you know what? I've finished all the Michael Connolly books. They are fantastic books. I watched them on YouTube yesterday. And if you've not read them, the level of detail in those are phenomenal. I love them. But I'm trying to find other books. If anyone comes across any books. But TV shows, I watched this week, The Mob Unboxing. Did you see that?
Yeah.
I don't know if it was on this week. Was it on this week?
What was it Panorama?
It's called The Mob Unboxing Panorama, yeah. Essentially, a guy, it's an Irish guy, and he's basically head of head of an Irish drug and weapons cartel. But he's also got the biggest boxing, or he's now removed himself from it, but the biggest boxing management group around. What's his name? Mob Unboxing. But anyway, he is Tyson Fury's personal advisor.
Yeah. Yeah.
Is literally a video of Tyson Fury recently saying, guys, I just got off the phone from so-and-so. Oh, what's his name? The Mob Unboxing. Just got off the phone from thing. It's on. Me and Anthony Joshua. I'm going to punch his face in. And he's like that. Well done, son. The biggest pound for pound. He's the biggest boxing. All I've got to do is punch Deontay Wilder's face in. Then I'm going to fight AJ, knocking him on the floor as well. But he basically thanked this guy who's a mobster who's had lots of people killed.
It's Daniel Keenahan, isn't it?
Daniel Keenahan, yeah. Worth watching that, phenomenal. And I thought, I thought it was, these are the kind of things you see in films, the gangs. But literally, in Marbella, they had people shot loads of times, and he's personally.
But it was sort of like, some shady characters involved in boxing. No way, really.
Not to that level, not close up to like Tyson Fury. He was like the biggest. Daniel, everyone says, if you look at it, it's worth watching, Bad, really. It's like they are gangsters. Well, they say they're gangsters. And then Daniel himself released a film, didn't he? A film saying this was all fabricated. And they released this film of like a cheesy priest film where he was played by a very good-looking actor, saying he was framed by the government and all this stuff. So they're trying to frame him as being a drugs guy and a weapons guy, and he's got no connections to that whatsoever. But it's worth looking at. It's phenomenal. I thought, really? Is this going on? And it is dodgy boxing. But there we are. And the other one is on BBC iPlayer. It's called the Trump Show. I just started watching that, and part 2 of that now. And it's basically they've got all the people that worked with him, and they've got people that pro him.
Judd Trump, the snooker player.
Yeah. Imagine that if it was, he went there. What the heck is this? No, Donald Trump, and it is it is insane how they said the first year, 100 days was chaos. Like no one knew what was going on, and Trump was like got a bit paranoid and he didn't understand.
Oh, really?
And they've got everyone from the inside who were sacked by him, and then people who were still close to him. Steve Bannon on there, all the guys. But it's called the Trump Show, and it's like. This is insane. They've even got what's her name, the porn star Stormy Daniels on there talking about it and how they got together and all that stuff.
Yeah.
But it's worth watching the Trump Show.
Okay.
It's like,
you say?
Yeah, it's on iPlayer. Yeah, but you know what? You think life is more bizarre, isn't it, than fantasy? That's why now I like real life dramas because have you watched Fargo? I was quite old. I watched Fargo. I thought,
there's a few series of Fargo, isn't there?
Yeah.
The film or the series?
The series. And what's his name, isn't it? Martin
Freeman, yeah.
Martin Freeman.
His accent's a bit dodgy, isn't it?
Yeah.
He doesn't quite nail it.
Well, that's only one series. There's about 3 different series and different locations.
But I tell you who's good at it.
They're all really good.
Yeah, Billy Bob Thornton is good in it. He's fantastic, the killer.
Yes.
But they're saying that's real. That was based on a real story. I thought, really?
The film is, yeah. The film's hilarious.
Yeah. I thought that's just nuts, and I think so that's why I like when I see now a film and drama. I want to say is this real because real life is a lot more bizarre than actual fantasy.
Speaking on that, did you see the letter that Trump wrote to the Screen Actors Guild?
I thought that was fake. Did you?
Yeah,
and it's not fake.
I read it 3 times. I couldn't believe that was actually real. It was like a parody.
I saw it on Twitter.
Any sort of self-awareness.
Yeah, I
didn't see that. What was that?
Yeah, but Trump letter. I saw it on Twitter. I thought someone just faked this up because they'd done that before. Cruise letters, and then I saw on BBC News. I thought, what? That isn't real. He said, "I see you." He said something like, "I see you sacked me from the thing, the Actors Guild." Who cares? I've been in. He said, "Home Alone 2." I've been in. It was like a parody of this. I've got
it here. It says, "While I'm not familiar with your work, I'm still very proud of my work on movies such as Home Alone 2, Zoolander, Wall Street, Money Never Sleeps, and television shows including The Fresh Prince of Bel-Air, Saturday Night Live,
and that's why I thought
one of my most successful shows in television history, The Apprentice."
That's why I thought it was fake. I thought that's the kind of thing you do. Home Alone 2, starting off the sequel of a really brilliant. So I was in Police Academy 17 as well, if you look closely. I know, it's like nuts, isn't it?
I just love the fact that he's put Wall Street, Money Never Sleeps.
But that's why you should watch the Trump Show, because you realise utter chaos, and you really think, hang on, how was America still standing when he was running? Of course, maybe biased, and people there's some pro people there on this as well, saying he's amazing, but you've got to give it to him. He's got a talent at creating,
nonsense.
Well, excitement and again, you gotta love someone or hate someone. It's a Marmite effect. And if you got that kind of reaction from people, you'll always do quite well. You said there's no point sitting on the fence on any polarizing issues. Take a side. If you want to get followers or anything, take a side, have an opinion. Because the people who sit there and say, well, I don't know, let's think about this and debate this, kid. They don't get as much followers. Trump is he's polarizing, isn't he? And people will go with him and will die with him, and it's phenomenal, but worth watching. Any TV shows or anything recommended, boys?
I thought The Serpent was good. That was
Paddy didn't like that.
That's a true story.
Oh, I couldn't handle that.
Why?
It was too dark.
Yeah, I know what you mean, but it is quite dark.
I thought it was good.
Paddy, you read that
I don't
book?
like watching stuff where you can see an inevitable, where you can see people's lives going downhill. I don't like that.
I know. But do you read that book, Pad, that I've given you? You haven't read that either?
No, I couldn't handle it, mate. It's too claustrophobic. It's a guy stuck in a coffin, and I couldn't.
What do you want in happy stories? It ends up.
I'm very claustrophobic. The idea of someone being buried alive is not. I don't know. That's not fun bedtime reading for me.
What,
there's twists in that story. I know the one you're talking about.
Yeah. Roy Grace books. It's a Roy Grace. What's his name? The writer. I always forget his name.
Peter
James. Because you got two. It's like Steve Martin. You got two start names. I can never remember Peter James.
Start names.
Two first names. His names are Peter and James. Steve Martin.
I have too.
Never really thought about it.
Yeah, and so I was like, Peter James is the writer. Yeah, it's the first book, and it was Dead Simple, it's called, isn't it? I think. But where is it? Was it like a bachelor party gone wrong? Or was it stag do gone wrong?
Yeah, so they bury the groom and then drive off for a laugh, and then they all die in a car crash. So no one knows where this guy is. And
it's a good start, that though, isn't it? Imagine that.
It's just
so they bury him in a coffin, isn't it?
There's more to it than that. You got to finish it.
Yeah. Isn't it in a coffin they bury him or not, or something like that, or something?
Yeah. That's a joke.
And they drive off and they crash the car. That's a phenomenal twist to start. You go, oh my god! But yeah, no, Peter James, I love it. I read all his books. Do you know what I said on the Kindle app? There's a little thing there. They're trying to gamify reading. I did 36 books last year. I've done 4 this year already, and I thought that's I didn't know that, but I quite like that now. I want to beat next year.
That's a lot of books to read.
Yeah. I read every night.
Are they colouring books?
Yeah, no, they're crime. They're not shares or anything like that. They're just crime and drama books. I quite like them. You know, they get me a bit of escapism, get me to sleep at night. They just fill your head a little bit and get you to sleep.
Do you read every page, or are you sort of scanning them?
No, I read every page. But that's the power. I like the Kindle. See, you can't do that. Read real books. I can't tell you how many books you've read.
Okay. You can count them on your shelf.
It's called a bookshelf.
Yeah, exactly.
Yeah. Right, anything else, boys? Anything else we're chatting about?
No.
That's plenty in it. We can save the rest for next week.
Yeah. I didn't mention Escape Hunt, by the way, did I?
A little bit.
I didn't mention it at all. I didn't.
A little bit.
Okay. All right. I just thought it was quite nice. Do you know, that one thing, people saw, it's funny, a lovely guy on Twitter said about the news about that share incentive scheme for employees. And they're issuing some shares. And he said, that's a bit negative, is it? Or I said, no, it's not many shares, but I think that's very good. I mean, I read a book a while back about companies that invest in their people. I don't know who it was. But basically, they did an index. What was it?
Was it a crime drama?
No. But essentially, the companies that invest in their people and do things for them and offer them incentive schemes, all this kind of stuff, everything, you know, invest in their employees, outperform massively companies that don't. You know, and it's because, of course, you want
all the sort of like goblins and elves that they hire.
Yeah,
they probably don't normally own shares.
Yeah, okay. And on that bombshell, we'll leave it there. Yes.
Okay.
Again. But no, it's nice that they're giving worker rights to goblins and elves, which generally don't fall outside that remit. Generally, you know.
Is that to go in with their Alice in Wonderland theme?
Yeah, exactly. And the bunny they give them shares to as well, and Alice. Lovely. Guys, have a nice weekend. Speaking next week.
Bye.
Bye.
The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.